Greetings and welcome to the Superb Diamond Range Show. This is episode 21. Today's date's the 7th of February 2015. Today's episode is going to be about personal finance. Now, personal finance is a very big thing for most of us in that we kind of need to get a handle of it in today's world because, bills are becoming more expensive. Everything's from utilities is going up in price, and it's becoming much more expensive to live and operate in this world of commerce. So I'm going to give some personal tips that I've picked up through my own research and different things. I'm going to start off with talking about setting up bills either at the end or the beginning of the month, which is dependent on your pay date. I feel that it's important to get your bills set up around, not too long after you get paid, obviously. I'm not a fan of direct debits. I actually think direct debits are evil. My belief is that setting up a direct debit is like handing a complete stranger, i.e. the bank, a pair of keys to your bank account that they can access anytime and help themselves to any amount of funds, regardless of what they say about the direct debit guarantee or not. So I'm quite against direct debits, and obviously direct debits can lead to, if you don't have the funds in place, to fines and charges, which is never a good thing to get charged by the bank. So my advice is to, rather than pay by direct debit, do your very best to try to opt out of direct debit and go for a standing order, or try to make a manual payment. Standing orders are much better in that they'll only pay the bill if you've got the funds in the account. And, again, it won't lead to getting charged if the funds aren't there and, getting a £35 fee or whatever it is these days. So I always recommend standing orders, and also standing orders gives you a bit of control because you can choose the amount that you want to pay for the bill rather than the bank or the utility company dictating to you how much you should be paying. So I would definitely go down the standing orders route, or these days you can set up a bill payment through your bank and you can just sort of pay it when you have the money or when you choose, really, to be honest, which is probably another great way to stay in control of your finances. I'm a very big fan of cash as opposed to debit cards and credit cards. I kind of feel that when you've got the cash in your hand, you're much likely to spend the right amount as opposed to too much. Whereas if you hold a credit card in your hand or a debit card, there's always a tendency to kind of spend more than you really should. And I feel that if you've got cash in your hand and you kind of think, well, that's gotta last me until the end of the month or to the end of the week or whatever, that you're much better off with having that cash in your hand and knowing that that you kind of want to save some of it or not spend it all. Whereas the credit cards, you kind of don't really see it that way. You kind of see it as just a sort of infinite line of credit, basically, that you can smash. So I definitely don't believe in that. And obviously cards are dangerous in that you can be in control of paying them off each month, but then something major could happen, some major catastrophe, and you could find yourself not being able to make the full payment for the month and sort of resorting to minimum payment, which in the long run you just end up paying loads of interest and giving up money that could be going on important things in your life, but instead it's just going to fund a bank that is just gonna it's not the right place you want to be transferring your energy. So I definitely don't advise the use of credit cards or debit cards. I mean, obviously there are going to be times when maybe it could be safer to use a debit card as opposed to cash, but 9 times out of 10 I would prefer to use cash, personally speaking. Just wanted to talk a little bit about debt. Debt is a terrible thing, and it's one of the reasons why a lot of people in this world are stressed and struggling. Basically, it's all because of this thing called debt. And the way that the system is set up, it's to a lot of people and nations now are getting into a lot of debt, and it's something that we should all avoid. And you might think it's an innocent thing, just getting your first overdraft or getting your first credit card, but I advise not to even get involved in that, and to try to save for things and pay for things with cash. It'll be much better. Don't listen to all the rubbish about, oh, you've got to build up your credit score and stuff like that. There's it's much better to pay for things in cash and to save for things like they used to in the old days. A lot of people want things now, and it's easy to just put things on the credit card, but as I say, you don't know what's going to happen tomorrow, and sort of money that you could be using to put towards things that you're really interested in, like your passions, or a holiday that you really wanted to go on all your life, and you're going to be losing out on that just because you're going to just end up paying loads of interest to a bank, and that's never a good thing. I would definitely recommend credit unions over banks. I know that people will say that it's only if you get mixed up with banks that they become like predatory thieves, but naturally I just believe they are predatory thieves. But to me, it's like try not to get involved in their world, and you can bypass them almost. For me, credit unions are really great. I mean, unlike banks, they only lend what they have in the savings, the pool of savings that they have from all the members, and basically, you can only borrow what they have in savings, whereas a bank can sort of lend money out on fractional reserve, which is like, if you put $1 in or £1 in, they can lend out £9 or £10 or $10. So it's much more riskier and crazier, to be honest, and that's why the world's in a mess that it's in due to things like that. So to me, a good credit union, is always better. Also, if people are going to get into debt, I would say, if they feel they've got no other option, definitely credit unions aren't going to rip you off like banks. They're going to probably offer lower interest rates. I've heard of people that have been in debt with banks, high street banks, that have turned to credit unions to kind of sort of pay off debts with high street banks, but with credit union loans, and they've been able to kind of pay a lot less interest and pay it off a lot quicker. And they've noticed that credit unions are much friendlier than banks. When you go in person, they're very nice people, and they really want your custom, and they really have time to talk to you about things and give you advice, whereas some of the banks, it's a completely different vibe. You go in there, they can be a bit rude, and not always. I mean, I'm sure there are going to be nice people here and there in the banks, but I've always had a much more positive experience through credit unions. And I went to one recently that I joined when I relocated, and I found it to be excellent. They gave me loads of information, they were really friendly, and one of the things I like about credit unions is they encourage us to save, which is again, better than just putting everything on the credit card or getting into an overdraft. And another thing I want to talk about overdrafts, actually, that overdraft is really bad as well, because it's like digging a hole for yourself, basically, because you start off with a £200 overdraft, and then you go into that, and then you start off, increase it to 400 and 600 and so on, and your money keeps going in, but you can't really sort of dig yourself out of the hole, basically, or get out of the hole, because it's just getting bigger and bigger, and you almost have to kind of put your money someplace else to kind of not keep going back into it, because you start thinking that the overdraft is your money when it's actually the bank's money, and it's just a nightmare basically situation. So I would definitely advise against overdrafts as well. And these personal loans that they offer, well, I admit they can be good because they, there is an end to them, whether it be 2 years or 3 years or 5 years. But again, people like the banks, they would probably charge you, if you wanted to pay it off early, they'd probably give you like a penalty for that. But, again, credit unions wouldn't do that. You could probably pay it off very early, and they would just be happy that you paid it off. And I've even heard of people with credit unions that, 1 month they might not have the money to pay off their their loan with the credit union, but the credit union would only just send like a friendly reminder to sort of say, everything okay, and hopefully you can make the next installment. Whereas a bank would probably fine you, penalise you, and probably transfer it over to debt collectors or something. So yeah, to me it's just a complete waste of time to get mixed up with the banks. And to say the best way is with the credit union, because again they encourage us to save, which is more positive than getting into debt. There's an old saying in the Bible, the rich ruleth over the poor, and the borrower is servant to the lender. And that's a very true saying. And I've always felt that if we can avoid getting into debt, although it is difficult in today's climate, because there are times when things can just go completely wrong. You can have things like a car, which is like a liability basically. Your car could break down. You might have an expensive repair. Some people's boilers break down and they might not have an insurance set up for it or whatever. So obviously it's going to push people into debt basically if they haven't got the money or the savings. Some people recommend an emergency fund, which I think is good. It's quite good to have an emergency fund, and they recommend sometimes 3 months to 6 months. Some people say to start off with a $1,000, but have something, I guess, because you never know what's going to happen. And as I say to you, if you don't have anything, you're going to end up in debt, and that's not a good thing either. So it's better to have something to take care of these, unexpected expenses. Finally, the most important thing that I recommend to a lot of people, especially anybody starting out in the world of work, is something I got from reading Rich Dad, Poor Dad by Robert Kiyosaki, and also The Richest Man in Babylon, which I think is where it originally came from, the quote. But it's to obviously pay yourself first. Now, paying yourself first is very important in that when you pay yourself first, before your bills and everything. So say, for example, you get paid at the end of the month, on the 31st of the month. Before you even pay any of your, electric or gas or anything, you should always set some money aside to pay yourself first, and treat it like a bill. So you feel it's very important to pay your rent, and you feel it's very important to pay your mortgage, and so on and so forth. But you've got to remember it's very important to pay yourself first, and that means above all bills. So if you think electric's more important than paying yourself first, then you've got problems. You should always set a certain percentage of your weekly or monthly wage. So this could be 5%, 10%, 15, 20%, but you do this over your whole working life. So you always have 10% of your paycheck, and you do this for years and years, and you get to the point where, you have a lot of money that, things like emergency savings are always going to be there. If you have debt, you can clear the debt because you're going to have, money saved up. Paying yourself first doesn't necessarily mean just saving. It could also be things like, investing if you're into that. And not just investing in like stock market and so on. It could also be like investing in yourself, some training, some books, going on some courses. It can also be investing in technology. If you really are passionate about a technology, be it computers, anything like that, that can be classed as pay yourself first, because you are investing in yourself and putting it into something that you care and are passionate about, which I believe is very important. So to me, I should have really started off with pay yourself first, but I figured that it would be a good way to end, because it is very important to pay yourself first. And there's plenty of information regarding it over the internet, and anybody that's been doing it has something to show for their working life. And a lot of people now, unfortunately, due to high expenses, they have nothing to show for their working life. And again, if they start paying themselves first, even if they only did it for 5 years or 10 years, but it would add up and it would be something. And that's why I'd say it's such an important thing to do. And I recommend it to everyone, and I think that's a great thing. So as I say, pay yourself first, pay your bills last, avoid debt, use cash, and be honourable. Honour your contracts if you believe that they're it's a fair contract. And it's important that you stay honourable in the system, and do the best you can. And well, that's it for this episode. I'd like to thank you very much for listening. If you'd like to check out the archive, which is on superbdiamondrange.com, and the Twitter page, which is at superbdiamondra or superbdiamondra. My email address is superbdiamondrange@gmail.com. And once again, many thanks for listening, and stay blessed.